You know, to me, it is really interesting that out of the 100+ indicators that you have to choose from in the trading industry, you really only need one. Let's go deeper. Hey guys, JD here. So with my brand of price action, the way that I was taught to trade price action, it's truly amazing how simplistic it's been made for us. Out of all the 100 indicators that you can slap on a price chart, it's amazing that if you can just learn one, if you can just understand how to use this one indicator the right way, it makes trading so simple, and it gives you everything you need. It tells you everything you need to know. And so I know you're dying to know which indicator I'm talking about, but hit that like button because you know the fire is coming. So let's get it out the way. Hit the button now and be done with it, and we'll move forward, all right? So the one indicator that you need to be able to slap on your price chart and master is the 21 EMA. That's what I use. That's the only major indicator I've ever used. No, I take that back. What did I just say? I used to use a gang of indicators, and I used to lose with them all the time. You know what I'm saying? But once I found this brand of price action, I was taught to only use the 21 EMA. And so why? Why do we only use the 21 EMA? Because the 21 EMA, it tells you everything you need to know, okay? The very first thing it does is it tells you the direction of the market. So if prices are, well, let's say this arm's the EMA, I guess, and let's say this hand is prices. If prices are steady under the EMA, we're in a downtrend. It's that simple. If prices are above the EMA, actually price chart it would look more like this. Yeah. If this is prices, this is the EMA. If prices are staying above the EMA, moving up, we're in an uptrend. I mean, it's that simple. It's that simple. That's what the EMA does for us. And so a lot of times, if you've been following me on this channel, watching the work study lessons, you will see how I often talk about, you know, we've had a trend down, trend break, retest a new low. When I'm saying that, I'm referring to prices moving. The trend break will be when prices break under the EMA. Most of you will notice that I don't draw trend lines. The reason is because usually if you draw the trend line correctly, it's going to be parallel with the 21 EMA. So why draw it? You know, sometimes you could get more trades if you do draw a trend line. But if you really want to know, in my opinion, if you really want to know what the market is doing, all you have to do is follow the 21 EMA. And you'll see the break. And when you get that clear candle that closes under the EMA, you know you've had a trend break. You would have had a trend break too. And so that's why I don't even bother drawing trend lines anymore. I just use the 21 EMA. And so when I get that break of an uptrend, in this case, I know I got the break, and price action, we know that the market cycle is trend up, trend break, retest a new high. That's typically how the market moves. Nothing is 100%. It's not going to do that all the time, but it's going to do it a lot of times. The more and more you study price charts, the more and more you look at charts, you will see that, yeah, the market goes just like this. Boom, it's stair steps. You're getting a trend up, trend break, retest, trend up, trend break, retest. That's just how it moves. And the 21 EMA allows you to see that break and allows you to prepare to catch that second leg of the retest. I take trades like that all the time. Also, when you get that break, a lot of times the market is going to come back in two legs. That's how you create the second entry. That's why second entries are so powerful. So all of these setups that we're doing, the second entry, the higher low, they work with the 21 EMA. That's why it's so important to understand what the 21 EMA is doing. So, number one, it's giving us direction, right? Number two, it kind of allows us to know where we are in the market cycle. Because if we've gotten that trend break, we know the retest is coming. You know, so it allows us, the 21 EMA allows us to know where we are in the market cycle. Then once you get the retest to the new high, Now the 21 EMA allows us to know that that market cycle is over, right? Then the third thing it does is it acts as a magnet, because EMA, last two letters, MA, stands for moving average. So the 21 EMA is the moving average of prices. So once we get a trend up, trend break, and a retest to a new high, a lot of times that new high, let's say the new high is up here, a lot of times that new high is up here and the EMA is way down here. So the average price is down here for whatever reason, whether it be a news or smart money coming into the market, whatever reason that the prices got way up here, prices is going to come back to the average. Now it may not just shoot down like this, they may meet each other halfway. Either way, however you want to call it and see it, prices is going to come back to that EMA. So at that point, your 21 EMA will start to act as a magnet. That's why I say I want it to act as a magnet. So a lot of times, you know, when the prices get way up here and everybody else is thinking trend and continue to trend, I'm about to take a short, because I know that prices have to pull back to the moving average, to the average price. And so that's why a lot of times you may get two legs up, but then if you come from the bottom, you also have a first entry, second entry short that's coming. And if it's a mile away from the EMA, that's money. Now that's more of an advanced setup, as I said in a couple of videos back, but the more and more you trade, the more and more you will understand these concepts and understand that a lot of this is based off of understanding the 21 EMA. So if you just focus on learn how to read price chart, understand that the market moves in twos, that the market moves in a cycle, and then look at what it's doing in comparison to the 21 EMA, now you're reading the price chart. And you'll be able to take that second entry short where everybody else is about to go long and get trapped. You'll know, nope, it's time to go short because we're too far away from the EMA. And so many people lose like that, you know, because you've seen one leg up, trend break, next leg up, and about time you get in that second leg and it's shooting up, that's when your other indicators are telling you to jump in. They lag. That's why they call lagging indicators. But I'm not even finna shoot down nobody else's other indicators. I know everybody else loves to use indicators. Just ain't for me. It's not for me, okay? What's for me is understanding what the 21 EMA is doing, how far away I am from it, or how close I am to it. So the other thing that it does, it is most of your best setups are gonna happen off the 21 EMA. So I guess I'm on number 3 or 4. Let's say 4. All right, so number 4, when you do have a good trend and you've had a nice move up, and let's say you didn't take that second entry short, that's fine, because if it's a good trend, you should only take with trend trades anyway. So this is when you have to be patient and wait, and it comes down. But if it comes down in 2 legs, that's 2 legs back, or that's called a second entry with trend. And if it bounces off that EMA, it can't close under that EMA, and then you get a beautiful single candle off that EMA, go time. Again, the 21 EMA helped us make a trade decision. I cannot emphasize enough how important the 21 EMA is. This is exactly why I'm making this video, because, you know, I've kind of been getting us back to the basics here lately, and I want to emphasize what's most important. 21 EMA is up there. I mean, if it's not number 1, it's up there. The market cycle is number 1. Understanding the market cycle is number 1, because you have to understand what's going on in the big scheme of things. Then, you know, the rule of 2 is up there too. That's not. But man, without the 21 EMA, you don't see the market cycle. Without the 21 EMA, yeah, 21 EMA people, get your study on. Study moving averages, because again, it's telling us direction. So I know if the market is in an uptrend or a downtrend because of the 21 EMA. If we're far away from it, I know that we're probably going to move back to it. So I can get a good trade because of the 21 EMA. If I get a second entry that bounces off the 21 EMA with a great single candle, I know to go with that direction. I mean, it's pretty important. It is pretty important. So the 21 EMA is the only indicator you need. Take some time to master that. Take everything else off the chart, slap a 21 EMA on your chart, and just follow it. And you will be amazed at how you see, yep, prices is above, we're in the uptrend. Yep, prices is below, we're in a downtrend. Yep, we had a trend up, trend break. It couldn't stay under the EMA though, came right back above, and then it gave me another leg, that same distance. All of these concepts, all of these setups work with the 21 EMA. It's the only indicator you need to trade price action. All right, so let's jump into the work study lesson today, and I'm guarantee you we will see the power of the 21 EMA.
Hey guys, how's it going? Today is November 6, 2023. This will be our work study lesson for today. We were looking at the Euro USD. You can't see it in the screenshot, but we had a trend up. This was a trend break. This whole move here is the second leg. So that's where we'll start looking for our entries. And so count from this top here. This is a first entry, push down, push up, second entry long. Once this candle breaks higher, close on the top. I love this setup because it broke lower, trapped everybody who was trying to go short right here. See, a lot of sale stops would be sitting right here. And when this broke lower first, that's a trap. That's how traps are made, because the market knows, smart money knows, that sell orders are going to be sitting right here from this leg, but we're in an uptrend. So, because like I said, we had already had a leg that looked just like this one. We already had one. It was back here. You can't see it. It kind of, we pushed up. It kind of ranged for a little while and then started the second leg. So a lot of people had sell orders right here. Probably was a lot of them right here too. People who had them right here, they survived because this candle went up first. But people who put them right here, they were trapped them right here, pushed up, closed on its top. Now the dominant uptrend resumes. 1, 2, 3. That's a win. Then when you come up here, it's a couple trades. It's a couple ways to look at this here. Cause see, if you starting here, you kind of got a low, push up, higher low. So this would actually be the entry candle, but it didn't close above the top here. It still would have worked though. 1, 2, 3. But the better entry is to wait, because this is congested. So the better entry to wait, you got 1, 2 attempts back. That's almost another second entry long, really. But just looking at the color, we know we're expecting a leg of this distance. We're expecting another leg of this distance. And then you got 1, 2 attempts back, couldn't do it. When this candle breaks higher than everything, that's a go, because your target is here. Your target is here at this point, and we're making new highs. So you can take this one. And 1, it scared you. 2, 3, but it's a win. Now, an even better trade than taking this one is when you get this low, push up. That's a higher low right there. This low is higher than this one. And when you get this massive candle out, closes on its top, and again, you got the other leg that we've already had way back here. And you're always expecting legs to have around the same distance. I like this one. It clears everything to the left. You take that, that's the homer. 1, 2, 3, that's the homer. 1, 2, 3, 4. Then you come up here. We got another new high. So we got a first entry, boom, right there. Push down again. Couldn't close lower. Second entry, when this candle breaks higher, closes above this one, that's your second entry long right there. Take it. 1, 2, 3. Now once you get in here, it's congested, because this is, you basically have a new high in place now. So you don't want to take too much up here. We're too far away from the EMA now. So this is where understanding EMA comes in. The EMA is our moving average. And so now, prices are up here. The EMA is down here. You don't want to go long. You're too far away from the EMA. So what you want to do is wait for another EMA touch. You want to wait for another EMA touch. So when you're in an uptrend and you've already had 1, 2, 3, 4 solid trades, and prices is a long way away from the EMA, you want to wait. You don't want to counter trend trade in most cases. So you don't want to try to take any shorts, especially when it's a nice trend like this and the EMA is straight up. But what you need to do is just have patience. I had some some silly losses over the weekend, and I was like, and so I went on demo and just started trading to see what I was doing. I was being impatient. Because, I only need 2 wins to get to this 2%. So sometimes the days are short. And so in my head now I'm thinking like, let me go down here and get my 2% real quick and be done. And it caused me to be a little bit impatient, and I took some dummy trades over the weekend. And so, it was so amazing. I had this prayer that just came to me like, Yahuwah, increase my territory by increasing my patience. Ooh, that hit me hard. Ooh. Did that hit anybody else just now? Increase my territory by increasing my patience. Woo. Maybe that was just for me. I don't know, but that one hit when I heard it. And so I was like, you know what? I'm going to be patient. I'm just going to wait and follow the rules. And so you're in this situation. You're a mile away from the EMA. Just be patient. And what do you get right here? Now, this is tough to see because this green candle throws everything off. But this was really a first entry. This is your first entry. Why you don't take first entries? This candle looks like money, but you don't take that because it's the first entry. But this is a first entry. Push down. Now you got the touch right off the EMA. The best trades are right off the EMA. When this candle breaks higher, closes on its top, strong, full body, beauty. That's the second entry long. You take that. 1, 2, 3. Game time. All right. But now you got another new high. And again, you're too far away from the EMA. So do not take this low, push up, higher low. Don't take that. You're way too far away from the EMA. You've been trending way too long. And you also know that you already had a leg of this same distance. And this was the trend break. So this was the retest to the new high. So when you're looking at the price chart in the overall picture, once you get way up here, like that market cycle is probably paid out. We've had 2 legs of the same distance. I'm a mile away from the EMA. No more longs again, unless we come down to the EMA with a second entry long setup like this one, or back here. You want something off the EMA. But what happens this time? When you're patient and wait, you notice that, boom, we push right through the EMA. We push right through it. I mean, this was the first close under it. And then this one let us know, time to go short. Time to switch your mind. Because we've already had a trend up, trend break retest. So the market cycle is over, going long. And so once we break back under the EMA, again, the EMA is here to give us the direction of the market. It's here to teach us, to show us where we are in the market cycle. So once we had the trend down and trend break, you know what? Let me go to a chart so you can see what I'm saying. Do I still have a chart up? I do. Okay. So if you see here, this had already trended up, range, new high, range, new high. This market cycle was already over. We already had a trend up, trend break, retest the new high. So once this one breaks under, you got to start thinking short now. You see how that works? Got to start thinking shorts now. So you get the high, push down. Here's the lower high. This one, I was not sure I was going to mark it up, but man, it tried to come up. This is basically right off the EMA. You see all the rejection on this stem, and this body closes lower than the one to the left. The problem is it left a lot of stem here, and I consider this a warning shot, and I consider this a warning shot. But if you trust the market cycle, you know that this uptrend should be over. Your target now is way down here. It's way down here. And you got a lot of more rejection. Also, look at this distance. Look at this leg. You see this leg here? You're expecting at least another leg of this distance. So for all those reasons, I marked it. You take it, and it's a homer. 1, 2, 3. Then the next trade you get is this high, push down another lower high. This candle didn't break higher, but at this point, we're dropping. And then you get this nice surge, closes on its low, closes lower than this one and this one. That's a go. Again, your target is way down here. And you get it. 1, 2, 3. Okay. Now you push back hard right here. Push back hard right here. Close on the other side of the EMA. But again, now you're thinking we're going to get another leg of this big distance. Okay. And then you push higher. You kind of got a matching top here. pushed down, closes on its low, back under the EMA, took all this back. I'm gonna be honest, I skipped this trade. Because it was, to me, it was the first entry. Push up, this is a low. Push up, push down, that's the first entry. But the weird thing about it is actually also a second entry short, depending on how you decide to count. See, there's two ways you can do this. You can count by the stem. If each stem is steady being higher than the last one, you don't get the leg until you get a stem that's lower. So if you count stems, this is a first entry right here. This is your first entry. Then you pushed up in that same candle and came back down, second entry. I personally don't really count stems. I count colors. I like to see two reds back. I mean, in this case, it would be two greens back. I like colors over stems, but technically, this was a second entry short, and it worked just like one. But I would rather see colors back, so I didn't take this one. But then, so if you got the low here, check this out. This is a first entry. This little stem, it's hard to say if it got lower than this one. It's so close, but I don't think it did. Then you pushed up, so this is actually the second entry short per the colors. We got one row back here, down, another green row. Even though this row is just one candle, I like to see rows back. So this trade I like better, because to me it's more of a second entry short. Both of them are kind of shaky. You know, if it had made just one more pushback and then off the EMA, it would have been a beautiful second entry short. So both of these are kind of shaky. Again, I skipped this trade because it didn't close lower than this candle. And honestly, I kind of regretted this one. I regretted not taking this one. I kind of was kicking myself because it was an easy 1, 2, 3, you know. So I won here, and then I skipped a win here, skipped a win here. That can mess with you mentally. It really can. But at that point, I was like, okay, that's why Yahuwah gave me that word last night. Patience. It, you know, I don't let it eat me up that I just missed two winners, you know, and that was for my 2% day too. But I said, I'm not going to let it eat me up because I know the market is going to give me another opportunity. So just, you know, brush it off your shoulder, you know? And so, but to me, this was the second entry. Then 1, 2, 3, boom, down. Then we had another push. Now here, now we can clearly see one push down, 2 legs back. So I was thinking, all right, if we get a low, push up, higher low that breaks, maybe this uptrend is going to continue. Maybe this is a trend up, trend break, retest. But I was like, probably not, but it's possible. So I was really sitting on my hands through here to see what happened. And then we got this candle. Boom. I was like, the downtrend is back on. It's back on. And now I know we're going to get another leg at all this distance because we can't stay above this EMA. The EMA, again, is the guide. And again, my target is down here. You know, I'm expecting prices to get down here. You know what? Let's see if it did since I still got that chart up. I can't make this stuff up. I cannot make this stuff up. It made it. And look, in 2 legs too. 1, 2 legs down. Price action works, people. Price action works. I mean, I can't make this stuff up. The whole time I'm up here taking shorts, I'm expecting that we're going to try to test this low. And it did. Man, I can't make this stuff up. All right. So what happened here is I was waiting. I saw this candle. I was patient. But I said, I'm not taking these. I do not like big candles that push through the EMA like this. Because you know why? I'm too far away from the EMA already. I know this candle looks good, but if you take this trade, it loses all the time. I see it lose all the time. So again, man, the key word today was patience. Man, God gave me that word last night, and it paid off today. So I waited. I said, nope, I'm going to wait for something closer to the EMA. But then I got the high, push up, lower high. Broke higher, trapped everybody who was going long, thinking we finna get a leg like this, but that was 2 legs back. And our target is down here. We're under the EMA. The EMA is the guide. The EMA was saying, nope, still go short because we're trying to come here. So I wait. Now I didn't take this candle because I didn't like the way it closed. Had a little stem, little body. But what ended up happening was this candle shot down real fast when it opened. So I took it. Because a lot of times, and I could have waited. Maybe I even should have waited. But because I just knew, like, yeah, man, we're about to get another leg down. We couldn't go higher. This is a high, push down, lower high. I really wanted to take this, but I just didn't like the way the candle looked. I took it. Maybe I shouldn't have, but guess what? 1, 2, 3, 4. It was an easy win. Never was in jeopardy. And so this trade here worked because I understood what was happening in the market cycle. And I know what's happening in the market cycle because I understand the power of the 21 EMA. So use the 21 EMA. It's your guide. It gives you direction. It lets you know what you're doing in the market cycle. And the best trades, always remember this, the best trades are off the EMA. Let's look. Off the EMA, easy win. Off the EMA, easy win. Near the EMA, easy win. Near the EMA, easy win. Off the EMA, easy win. Are anybody getting this picture? Near the EMA, easy win. High, lower high, near the EMA, easy win. Does anybody see this? The EMA is your friend. The 21 EMA is your friend. It gives you direction. It lets you know what's happening in the market cycle. And your best entries are near or off the 21 EMA. So that's the lesson for today. I hope you enjoyed it. As always, please like, subscribe, and share if you haven't done so already. And let's look at the trade example for today. And I'm signing off with that, and I'll see you guys tomorrow. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye. And today is November 6, 2023. We can see a trend up, trend break, retesting new high. Man, we got a low, high, low coming down. Strong signal counter coming off the EMA right now. The bottom should be here. Let's go. 1.1%. Strong candle close lower than the one to the left. We got a high, push down, lower high. Should be coming to test these lows here. 3 minutes. Closing low, closing low, closing low, closing low. Good close. Okay, so thanks for watching this long. Please subscribe if you haven't done so already, and check out these 2 videos if you need to learn more about price action. I wish everybody a great trading week. Let's go out there and get it. My name is JD. As always, I wish you increase on the Sutton. Bye-bye.